the early going, pre-market that is. Dow up 100, Nasdaq up 103. Same again. Tom Hayes is with me. Do you see any pullbacks greater than 10% in the next 6 months?
I don't think so, Stu. You know, on average, since 1928, you get a 20% pullback every 3.5 years. We have had 3 in the last 5 years. So we've pulled forward a lot. We're suffering from recency bias. We think another one is coming. I think more modest, you get a normal 10% correction every 13 months on average. That's realistic. Maybe you go 13, 14, 15% mid-year correction, but I wouldn't expect that 20% that everyone's looking for. I think we've got a strong economy. We've got an easing Fed. We've got 316 central bank rate cuts this year, a lot of liquidity, and quantitative tightening is ending in December. So 10% corrections normal, 15, 20, maybe not so much.
Okay. Meta is buying chips from Google. Is this a breaking point in the AI chip market?
I think this is close to a deep seek moment. And what's important about this is the TPUs, tensor processing units, are cheaper and they take up less energy. And most importantly, they are outside NVIDIA's ecosystem, which tells you costs are going to come down. The monopoly may be going away for NVIDIA. And you're seeing that in the market cap of Google, almost 4 trillion. The market cap of NVIDIA down to 4 trillion. So they're almost pari passu. And everyone knows Gemini 3 was trained on these TPU chips, and it's faster, sharper, and deeper reasoning than OpenAI. So a lot to be interested in here moving forward.
Okay, here's the question which a lot of people are asking, especially at this time of year, is do you have any reason to believe that stocks will go down and stay down for a period of years? See, I remember the 1970s, which were awful for stock market investors. Is there any chance we'll get the same thing this time? Stocks down, stay down. What do you think?
Zero chance. The average age of the millennials is 34. And historically, when you have the bulk of your population at that age, this is when they start family formation, housing formation, they make babies, they spend money, you tend to have boom times, and that's going to continue for at least another 5 to 7 years. So we remain constructive. You have pro-growth policies. You have an accommodative Fed that is coming into power. We've heard the rumblings about the new picks for 2026, and you have an easing cycle just beginning. So any weakness, now we've got an 85% chance baked in of a cut in December. I think you want to get through that Fed meeting and ensure that cut is in place, and then you can start to get put some money to work and put it to work selectively.
Okay, we're very glad to have you on the show right before Thanksgiving, and we hope you're right. Tom Hayes, see you again soon. You have a good Thanksgiving. We'll see you later.
Happy Thanksgiving.
Take a look at it. I've got